Tesla stock yet again is green for the day, up about 1%, fueling a lot of optimism following Tesla earnings, but continuing with very positive news almost on a daily basis. And we're getting new insurance registration numbers out of China, and they are exciting. So we're going to get into that information here in this video, as well as what Fed Jerome Powell just said that could throw some cold water on this rally. Let's get into all of this information and much more. If this is your first time here, consider hitting that subscribe button and liking the video if you find this information insightful, or if you learn something out of this video and want to stay up to date with everything going on in the market. So what is currently going on with Tesla today? You are up over 1%, continuing this post-earnings rally where Tesla went from $101 now to $196. We were actively predicting this before Tesla's earnings because it looked like it was pretty easy to spot, aka you were getting a lot of soft data that looked really good about demand, and that is continuing to be the case with Tesla stock. After all, the reason Tesla was down over 60% in 2022 and really seen that November, December sell-off accelerate was because of demand concerns. While demand concerns are no longer a concern for now, this could become a concern later in 2023, but it seems like every single day you're getting one more analyst that are bullish on Tesla for 2023, and economic data that supports demand is very strong. Let's get into this article just briefly. It says Tesla stock rally continues as China market share shifts now favor Tesla. As per this analyst, Tesla shares reverse, edging lower early Tuesday after data showed Tesla vehicle insurance registration surged in China last week. In addition, a top analyst forecast Tesla demand would grow as China's latest COVID wave seems to be subsiding, and with the Chinese New Year celebrations now in the rear view mirror. The global EV giant saw 8,643 insurance registrations in China for the week of January 30th through February 5th, a 157% increase from the 3,356 registrations 2 weeks ago. Last week was the first official work week after the Chinese New Year. Many people's holiday extends to February 5th, according to the news outlet. Now, why is that so important? Just why is that so important? If you've seen 8,600 vehicle registrations in China alone, if you think about you have 12 weeks, let's break down a little bit of simple math here, and the calculator is not right there, but let's say you have, just call it 8,000, be conservative. You times that by 12 weeks in a quarter, you're at 96,000 vehicles just for China alone. Now we are targeting somewhere around 370,000 vehicles to be delivered in Q1. Ultimately, we want 1.8 million vehicle deliveries, so that would average, let's do 1.8 million divided by 4 quarters out of the year. That would be roughly 450,000 vehicles delivered every quarter. First quarter tends to be on the lighter side compared to, Q3 and Q4. But if you're getting indications of potentially 96,000 vehicles that, in theory, if this demand continues, would be sold just for Q1 in China, that's pretty dang good. That's pretty dang positive, considering Europe and America are, again, very large markets for Teslas. So, for good reason, Tesla continues to rally. Demand concerns pretty much out the window. This also says that Tesla sold 66,051 China-made vehicles in January, a 10.4% increase compared to a year ago, and up 18.4% versus December. The sales numbers released by the China Passenger Car Association on February 3rd do include exports. Tesla's plan to produce an average of nearly 20,000 vehicles a week at its Shanghai plant in February and March, according to Reuters, a signal that the global EV giant is expecting increased demand. That puts monthly production on track to roughly match September levels of 82,000 vehicles. And it does go on to say how China did cut prices on their vehicles that looks like demand is holding up very well. It's not like we're just getting a week of good demand. It's looking like multiple weeks so far of increased demand. And that's even what Dan Ives, one of the top analysts for Tesla stock, with an overweight price target of $225 that was actually just increased yesterday from $200 to $225, continues to say that Tesla in China will have a tailwind because of these factors that we talked about here in this article, like COVID dying down and the new year being over. He's expecting some very good numbers, and it looks like the markets are definitely as well, guys. So there is that on Tesla specifically. As far as what Fed Jerome Powell said today, let's take a look at this article. And he said that disinflation has begun, but it's going to take some time. Markets latch on to Powell's words and briefly turn positive before flipping back to negative after he cautioned about stronger than expected economic data. Quote, if we continue to get, for an example, strong labor market reports or higher inflation reports, it may well be the case that we have to do more and raise rates more than is priced in, he said. So everyone's looking at the Fed and they're like, you're going to raise one more time, maybe one more time after that. We're going to be at 5 to 5.25% federal funds rate very shortly, and we're expecting the Fed to hold those rates there. But Fed Jerome Powell is saying if economic reports and data keep coming out very positive, they have more room to raise rates. Essentially what the Fed is telling you is that we need the economy to go through a little bit of pain. He said, quote, it will be bumpy. That's what he said. It will be bumpy. And that's a fancy way of saying you're going to see softening economic data before we stop raising rates, before we pause raising rates. They need to see even one bad jobs report. That's all it might take. But if we keep getting good data, yeah, it's good for the, economy, but it's going to mean the Fed's going to raise rates some more. So in a weird way, you kind of moved out of this whole narrative that bad economic data is bad news for the markets. The markets were taking that positively since the start of 2023 because it means potentially you're getting a soft landing and inflation has continued to come down over the last couple of months. Well, Fed Jerome Powell is saying that good economic data might not be so good for our trajectory to raise rates. So you might start to get this narrative come back that we've seen in 2022 where good economic data is bad again for the stock market. So that's the big news that we got today. Little bit on the hawkish side. I think the markets are really underreacting to it today. To be quite honest with you, we did see a big reaction when this did start to digest in investors. You did hit a new low and then you rallied pretty much straight up after that. So I think over the next couple of days, it's going to be important to pay attention to kind of what happens in the markets as far as sentiment is concerned, because you're at a really important moment in time for specifically the S&P 500, but for a lot of other stocks as you are starting to approach that August, September, in some cases the May level that we were at in 2022. After all, you are above the May level of 2022 right now. The only time we were above this in the past year was August of 2022, and you guys seen what happened with that rally. As long as you see economic data continue to show inflation is coming down, I think you're okay. But at the slightest sign that inflation might tick back up, that's where all hell could break loose in the markets. And this week you're going to have the Michigan Consumer Sentiment Survey that comes out on Friday. And that's going to be the most important thing, specifically Michigan 5-year inflation expectations and Michigan inflation expectations for 2023. You're expecting these both to tick down by 0.10%. So you're expecting the inflation expectations for the 5-year to come down to 2.8% from 2.9% last month, and the Michigan inflation expectations for full year 2023, you're expecting that to go from 3.9% to 3.8%. If you see an uptick in this, it's not going to be good, because inflation expectations have continued to fall and kind of foreshadow inflation coming down as well. After all, expectations tend to lead to reality, right? So there is all of that information. That's what you guys really need to know. Biggest thing I would watch out for is Fed Jerome Powell and potentially good economic data coming for the markets. Now, Wednesday, so tomorrow, you're going to get Uber, CVS Health, Wendy's, Dominion Energy, Yum, Under Armour that report pre-market. After hours is going to be Walt Disney, Affirm, Digital Turbine, Robinhood, MGM, Resorts, Ally, I don't know if I'm saying that right, O'Reilly Auto Parts, Goodyear. That's basically it for tomorrow. Big one, obviously, going to be Uber. That's what a lot of people are going to be paying attention to. And then obviously tomorrow after hours, Walt Disney is going to be the big one, guys. So that is going to be all for this video. Not too much else to actually say. We covered a lot, the most important things here on the day. Definitely Fed Jerome Powell is a key to that. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section if you have not already. Thank you for watching, and I will see you in the next one.